Dear Chartered Accountants, working professionals, and students in the domains of Indian auditing, accounting, and the tax and regulatory space, welcome to podcast of Fca Deepak Rao, a practicing Chartered Accountant. Daily news and updates for 20th November 2023. In a significant move, the government is poised to announce a potential exemption from tax collected at source or TCS on overseas credit and debit card spending with an individual limit of up to ₹7 lakh per financial year. A senior official revealed that this announcement is expected to be part of the interim budget and an amendment to the Income Tax Act will be presented in the finance bill next year to formalize this exemption. The proposed TCS exemption is specifically targeted at transactions falling under the Liberalised Remittance Scheme or LRS. Currently, any payments made by an individual using their international debit or credit cards up to ₹7 lakh are not covered by the Income Tax Act and need legislative action. The forthcoming amendment in the finance bill is anticipated to address this gap and provide clarity on the tax treatment of such transactions. In a significant announcement, the State Goods and Services Department has informed taxpayers that November 30th, 2023 marks the final date for availing input tax credit and ensuring the accuracy of information related to ineligible input tax credit for the fiscal year 22-23. The prescribed procedure mandates completion through the GSTR 3B return filing for the month of October 2023 with a due date of November 20th. It is imperative for all taxpayers utilizing the GSTR 3B form to claim the total input tax credit for the fiscal year 22-23 as specified in the GSTR 2B statements. Additionally, taxpayers must diligently reverse any ineligible input tax credit through the designated 4B subsection 1 table in the GSTR 3B form. The Directorate General of GST Intelligence or DGGI has initiated a series of notices targeting various real estate companies urging the payment of GST for a range of transactions involving group companies or joint venture partners. This strategic move aims to broaden the tax net within the real estate sector. The DGGI is specifically scrutinizing fees for management services and royalties charged for the use of brand names in intra-group and intra-JV transactions. These transactions, integral to the operational strategies, cash management, and joint venture arrangements of large real estate firms, are now facing potential GST implications. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.